Right. Let's unpack this. Today, we're taking a deep dive into a really fascinating case study from Finland.
Hmm.
It's sparking a pretty big debate, actually, about financial security in retirement, especially for, the self-employed.
Yeah, that's a group facing unique challenges everywhere, it seems.
Exactly. So our mission today is, well, to figure out why Finland's reforming its pension system for them, what the reform actually does, and what bigger questions this raises. About choice, safety nets,
In
fairness.
this whole changing world of work, it's got layers.
It really does. And we're pulling from government reports, studies, expert analyses, mostly from the last few years, 2020 to 2024. So you get a good shortcut to what's going on.
And what's really striking, I think, is how this specific Finnish situation, it sort of shines a light on these fundamental issues that social security systems everywhere are facing.
Like a microcosm almost.
Yeah, exactly. It highlights this pervasive problem.
Right. Let's get into that pervasive problem. It's essentially this widespread underinsurance among people who work for themselves.
Hmm.
So in Finland, they have this pension insurance scheme called YEL. It's mandatory if you're self-employed, meet certain age and income thresholds like over about 8,200 euros a year back in 2022.
And on paper, it looks pretty fair. It's meant to give the self-employed the same pension rights, same accrual rate, 1.5% a year, just like regular employees.
And this is the key thing, isn't it? There's a loophole, a big one. The self-employed get to choose their confirmed income. That's the income their contributions are based on.
And that is where the system, well, kind of falls down.
Yeah.
Because despite those equal rights you mentioned, what actually happens?
Yeah.
A huge majority, like nearly 84%, they just pick the lowest possible contribution level.
84%. Wow.
Yeah, so we call that underinsurance. Their pension income level is way below what they actually declare for taxes.
That seems short-sighted. Some studies call it myopic behavior, right? Focusing on saving money now instead of later.
Exactly, focusing on the short-term cost saving.
Mm-hmm.
But the consequences? They're pretty significant.
I bet. So first off, just really low pensions, right?
Devastatingly low in many cases. Back in 2018, the median pension for someone self-employed was a full 20% lower than for an employee.
20% lower.
And for a big chunk of that underinsured group, that 57-odd%, the average self-employed pension works out to just like 440 euros a month.
440 euros. That's barely anything.
Barely survival level in many places.
Mm-hmm.
And it gets worse
How so?
because it's not just about the old age pension. Think about other safety nets, sickness benefits, parental leave allowances.
Oh, right. Disability benefits too, or if his spouse passes away.
All of those, they're calculated based on that same low declared income. So if something goes wrong, the safety net is, well, minimal.
Leaving people really vulnerable. And I guess it hits the government's finances too.
Absolutely. The contributions from the self-employed don't actually cover the costs of their pensions under the scheme.
So the state has to top it up.
Increasingly so. In 2017, the Finnish state was footing about 19% of the bill. That's a growing chunk of public money.
Okay, so it's a problem for individuals, it's a problem for the state. Why? Why are so many people choosing this route? It seems counterintuitive.
It does, doesn't it? Well, research points to a few things. It's not just one simple answer.
Okay.
For some, there's apparently just low confidence in the official system.
Oh.
They might prefer putting money into private savings or, life insurance policies.
Right, maybe they trust themselves more than the state system.
Could be part of it. Then you've got the reality of self-employment itself. Many have really fragmented careers, incomes that go up and down.
An unpredictable cash flow.
Exactly.
Yeah.
So that mandatory pension payment feels like this fixed cost they just desperately need to minimize right now, especially when things are tight.
That makes sense. What else?
Well, there's also this idea of the free rider problem.
Ah, okay, explain that.
It's where some might be thinking, consciously or not, that, well, if worst comes to worst, the basic state safety net, the national pension, the guaranteed pension will catch them anyway. So why pay more into the earnings-related one?
Relying on the minimum backup plan, essentially.
Sort of.
Yeah.
And beyond these sort of rational or perhaps semi-rational calculations, studies also mention things like just making ill-informed decisions.
Not really understanding the long-term impact.
Or maybe misperceiving the incentives, what economists sometimes call bounded rationality, basically. People make decisions based on limited info or mental shortcuts, not always perfectly optimizing for the future.
Okay, so a mix of reasons. And who tends to fall into this underinsured group? Is there a typical profile?
There are some patterns, yeah. It often includes what you might call traditional self-employed folks with consistently lower earnings. Think hairdressers, barbers, truck drivers, plumbers, people in construction trades.
Okay.
Demographically, they're more likely to be female, maybe have lower educational qualifications, more blue-collar type work. Often they have careers with lots of short spells of self-employment, or maybe they've been self-employed for a really long time at a low-income level.
Interesting.
And interestingly, some of them also work as employees on the side.
Oh, so they might feel like they have some coverage from that job.
Possibly, yeah. It might reduce the perceived risk of underinsuring their self-employment income.
So it's a diverse group, but facing similar risks. Now, you mentioned some go the other way, the overinsured.
Yeah, it's a small group, only about 4%, but it's a stark contrast. These are typically highly skilled professionals, medical specialists, doctors, pharmacists.
Right.
They intentionally pay high contributions, sometimes maybe to take advantage of tax rules or subsidies. It just shows you how varied the self-employed population really is. You can't treat them as one single block.
Absolutely. So this whole situation, this underinsurance problem, it didn't just appear overnight. Did policymakers notice?
Oh, definitely. It got international attention, too. The OECD, back in 2019, they pointed right at this issue in Finland.
What did they suggest?
They recommended Finland reform how contributions are calculated. Basically, link them more closely to actual income, or at least monitor the declared income much better.
And the Finnish government took that on board?
They did. Sanna Marin's government, the center-left coalition at the time, made it part of their agenda. They put a bill before Parliament in June 2022.
Set to start in January 2023. So what's the core idea of the reform? How does it try to fix this?
Well, the new legislation tries to estimate that confirmed income differently. It proposes using the median wage for employees in the same industry as a kind of starting point.
The median wage. Okay.
Yeah. The pension institution is supposed to look at what someone with similar skills would typically earn as an employee, but also consider, and this is the quote, all other relevant information on the amount of work performed.
All other relevant information. That sounds a bit vague.
It does leave room for interpretation. But the stated goal is clear. Improve pension security and make sure that declared income better reflects the real value of the work being done.
Okay. Sounds sensible on the surface. But I imagine this is where things got contentious.
Extremely contentious. This is where the clash really happened.
Right. So groups representing the self-employed, like Euritasia, they're a major one. What was their take?
They were, well, kind of split. On one hand, they welcomed the idea of improving Social Security. That's good.
Okay.
But they had big concerns about how it was being done. Specifically, using that median salary as a benchmark felt too mechanical, too rigid.
Why?
They argued it doesn't capture the huge variations within industries. And they strongly felt that only the self-employed person themselves truly knows how much work they're doing, what their specific circumstances are.
So they feared it would just jack up costs unfairly for many.
Exactly. They warned it could place a much heavier financial burden on lots of small businesses, maybe even push some under.
And were other groups worried too? You mentioned freelancers earlier.
Yes, organizations like the Union of Journalists were quite critical. They pointed out that the reform didn't really address sectors where self-employed earnings are already way lower than employee earnings.
Like the journalism example, earning half as much.
Yeah, precisely. They feared these higher mandatory contributions could just crush freelancers, especially those with very little power to negotiate higher rates from, say, big media companies. It could lead to business closures, unemployment.
So it really boils down to a fundamental disagreement about fairness, doesn't it?
Absolutely. It highlights this deep conflict between different ideas of justice.
How so?
Well, you could say the government's approach, the Marin government's bill, leaned towards a kind of formal justice principle. Treat similar cases alike. In this view, all self-employed people are the similar case.
One rule for all, basically, for consistency.
Right. But the critics, they were arguing for more of a substantive justice angle. They're saying, hang on, these cases are not all alike.
A low-earning freelancer isn't the same as a high-earning doctor.
Exactly. You have to treat genuinely different situations differently. And the whole political debate became about, well, which cases do we count as like and which as unlike? It's not just policy mechanics, it's about core values.
Yeah, what does fair actually mean in practice in a complex economy? This Finnish situation really brings that question to the surface.
It really does. And it connects to broader shifts in how we even think about retirement.
How do you mean?
Well, we often picture retirement as this single point in time. You stop working, get your pension. But the reality, especially in places like Finland, with flexible retirement ages.
Where people can retire between, what, 63 and 68, depending on when they were born?
Right. The studies show retirement is much more of a process.
Hmm.
People often work in retirement now. It's becoming quite common.
Working while drawing a pension.
Yes. But this process also reveals, maybe even widens, some of the inequalities we've been talking about.
Okay, tell me more about that. Income disparities in retirement.
Definitely. Research shows that people who retired relatively early and didn't keep working, well, they usually had lower incomes to begin with, and their income dropped further after stopping work.
Makes sense.
But employees who kept working for several years while drawing a pension, they tended to maintain higher, more stable incomes well into their late 60s.
And what about the self-employed in this phase?
For them, it seemed to split into two groups again. You had some who kept working in retirement and maintained high incomes, likely those who were better off to begin with, and then you had those who stopped working earlier, and their incomes were much lower.
So this idea of flexible retirement, it sounds good, but the ability to actually use that flexibility isn't evenly shared.
That's a crucial point.
Yeah.
The opportunities to delay retirement, to combine work and pension income, they are not equally distributed at all.
Who gets to benefit most?
Generally, people with higher socioeconomic status. They often have better health, maybe less physically demanding jobs, more opportunities to find suitable work later in life.
So the well-educated, those in better jobs, they're more likely to work longer.
Exactly. The highly educated tend to retire later and work more during retirement. We also see gender differences. Women, on average, tend to retire a bit earlier and work less in retirement compared to men in these studies.
And the self-employed, even if they do work longer, are they catching up pension-wise?
Often not. Even working later, their actual pension income can still lag behind employees, mainly because of that history of underinsurance we talked about right at the start. The lower contributions earlier on have a long-lasting impact.
It all connects back. Stepping back even further, what does this Finnish story tell us about wider trends? You mentioned global relevance earlier.
I think it tells us a lot about the mismatch between old pension system designs and new working lives.
How so?
Most traditional pension systems, not just in Finland, were kind of built around a normal life course.
Yeah.
Steady, full-time job, probably male breadwinner model.
Right, the classic career path.
But today, life courses are much more fragmented. People have fixed-term contracts. They jump between jobs, maybe work in the gig economy. There are different family structures, migration. It's much more varied.
And the old systems struggle to cope with that variability.
They do, because now getting an adequate pension often relies more and more on working longer. But as we just discussed, not everyone can work longer.
Due to health issues, disability, maybe just can't find a job.
Exactly. So you have this trend, plus in many countries you also have moves towards pension privatization, cuts in public pensions.
And the risk is?
The risk is rising old age poverty and greater income inequality, especially hitting those people with these atypical work histories hardest.
So wrapping this up, what's the big takeaway for you, for our listeners? Finland's reform attempt highlights this huge global challenge, right?
Absolutely. How do modern social security systems actually adapt to work lives that are just so much more diverse and, frankly, less predictable than they used to be?
Yeah, we saw how a reform that's meant to create fairness can end up triggering this really deep debate about what fairness even is when people's situations are so different.
That tension is key. The tension between making the system financially sustainable, which governments have to worry about, and ensuring pensions are adequate and equitable for everyone.
Whether you're a freelancer just scraping by or a successful business owner, it's a complex puzzle.
It really is. And with flexible, fragmented work becoming more common everywhere, not just in Finland,
Yeah.
the question becomes, how do societies balance that sustainability goal with genuine equity? How do we make sure everyone is looked after, whatever their career path looks like?
And is it even possible to treat similar cases similarly, like that formal justice principle wanted, when the reality of work itself is just so varied now?
That's the big question, isn't it? Something to definitely mull over.